And we are shifting focus for now. Global debt has reached a new record of almost $338 trillion. But who is funding this? And more importantly, are governments borrowing responsibly? Or is the money being created out of thin air? What's going on? Could a sudden collapse trigger a global financial crisis? One thing is clear right now, the surge in debt is becoming unsustainable. Let's just dive into the debt bubble that's shaping the world economy and what it really means for you. First, let's have a look at what exactly is global debt. Global debt is the total money borrowed by individuals, governments, companies, banks, meaning almost everyone. Next, here's a look at who is actually funding this. Global debt is not funded by a single entity. This is funded by a combination of governments, corporations, investors, banks, and financial markets. Basically, governments borrow from domestic and international markets by selling bonds, and a majority of government debt is usually held by the country's central bank, domestic banks, the financial institutions, and the retail investors, apart from the governments of other countries. Corporations borrow to fund operations, expansion, and investments, often through financial institutions or by issuing their own bonds. And even household borrowings are included in global debt. So loans for mortgages, education, other consumer credit also coming under global debt. And now let's look at the debt of the major economies. Japan's public debt, the highest among developed nations, with a ratio of about 255% of its GDP. A large amount of that debt is mostly held by the Bank of Japan and domestic banks and insurance companies rather than foreign entities. US debt is also primarily funded by domestic entities. Roughly 80% of the public debt is held by US investors. And that includes mutual funds, banks, pension funds, and the Federal Reserve. About 20% is held by foreign entities like Japan, the UK, and China. Other countries buy US debt to manage their foreign currency reserves and secure stable returns as well. Now, overall, global debt added over $21 trillion in just the first half of the year. Governments, corporations, and households are all borrowing more. But the largest share is government debt in major economies. Central banks have played a crucial role injecting liquidity to keep borrowing costs low, and critics are saying this is akin to borrowing from a notional entity. Money is effectively being created to fund spending, raising questions about long-term sustainability as well. Economic crisis bets from high debt are fast turning into a reality, it seems. In terms of the money, the United States leading with over $37 trillion in debt, driven by high deficits and defense spending. China's debt is rising fast, with local governments and the property sector fueling concerns. Japan remains the outlier, with debt sustained only by ultra-low interest rates and largely domestic investors. In Europe, the crisis is spiraling, with the UK, France, and Italy facing growing debt unrest. And in terms of the debt to GDP ratio, Japan topping the chart at 255%. Italy, France, and the US are all above 100%. While China remains on a rising trajectory, its debt basically is projected to exceed 300% if the local debt is included. Now, ultimately, the debt must be serviced, and high debt can mean higher taxes, reduced public spending, and inflation, all affecting the ordinary citizens. India stands out as a case study. Public debt has been gradually moderated from 62.6% of the GDP in 2021 to an estimated 56.8% in 2025. Private sector borrowing is rising in a productive way, funding infrastructure and growth, and analysts are saying disciplined borrowing coupled with strong economic growth is key to avoiding a global crash. So what does that mean for you and me? Basically, rising global debt affects public services and even the value of your savings and investments. And while governments and central banks try to manage the risks, the size of the debt pile means that we all have a stake in how the world navigates this financial tightrope.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.